This is where I think you should be focusing on generally as property investors. So these are the areas most property investors miss out on, be it capital allowances, land remediation relief, maximising all of their allowances, use of home, rental room relief, personal savings allowance. These are some of the things which apply to property investors on an annual basis. And remember, saving tax in 1 year might only amount to £1,000, but if you extrapolate that over 20 years, that's £20,000. And if your business is growing every single year by, say, 10%, that £1,000 might grow by 10%. So you add 10% to 1,000 every single year. After 20 years, it's going to be a massive figure. So don't ever underestimate, or devalue that small saving of £1,000, because it adds up to a much bigger number over time. And you might be thinking, yeah, really, Shaz, you've shared a few examples of where you save people tax here, there, whatever. But what are you doing? Are you doing anything in your own deals to pay less tax? So I'm going to share a deal with you. Peterborough, near the Triangle, if you know where the Triangle is, near the B&Q, New England Club, Occupation Road. We bought this for £500,000 in cash. There's 3 of us. We then had to obtain planning permission to change it from commercial to residential. So let's have a look at, so this is a piece of land. Let's use this, okay. So it came with a small two-bedroom bungalow. This is the car park, and this is the actual building, which over here is kind of 3 floors, and here it's just a single floor big hall. So that's what it looks like. Let's look at the numbers. So we paid £500,000 to buy it, paid cash, no mortgage. Cost us £65,000 in terms of stamp duty, land tax, legals, planning fees, all of that. The refurb is going to cost us £400,000, and work starts on Wednesday in 2 days' time. And the interest that we're going to pay on borrowing the £400,000, I've said £50,000 or 52 grand. It's going to be less, but I've just jacked the number up to be safe. So in total, it's costing us just over £1 million to buy, change of use, interest, plus the refurb. The GDV is going to be 1.32 million. That's 6 one-bedroom flats and 6 two-bedroom flats. So the profit we're going to make is £300,000. That's not bad going, is it? 30% uplift on a small commercial conversion, I think, is pretty good going. But here's the magic. The first thing that you need to bear in mind is, if you buy commercial property, there's 2 opportunities for you to possibly not pay the VAT. Does anybody know why we would pay VAT if we're buying a commercial property? No? So at some point in the past, somebody carried out major refurbishment work, if it's an old property, okay, and they said to HMRC, we've spent quite a bit of money on refurbing the property, we'd like to claim back the VAT on the refurb costs. And HMRC say, you're more than welcome to do that, but there's 2 things you have to do. The first thing is you have to opt to tax, and there's 2 things you do. You charge VAT on the rent going forward, and then when you sell the property, you've got to charge VAT on the sale proceeds, and you're locked in for 20 years. So if you buy a commercial property with a sitting tenant, you can then avoid paying the VAT. Yeah? And the benefit of that is this: if you avoid paying the VAT, you don't have to raise that additional money. So in our example, on the £500,000, we'd have to raise another £100,000, which would either be our money or money from a third party. If it's from a third party, you've got to pay interest, you've got to pay arrangement fees, okay, and then you've got to try and get the money back from HMRC and repay it. And if that takes you longer than 3 or 4 months, which sometimes you can do, you're racking up more interest. But the worst thing is this: if you're paying VAT on the property, then you've got to pay stamp duty, land tax on the VAT element as well. So if you buy a property for 500 grand, you're paying SDLT on 500 grand. If you buy a property for 500 grand plus VAT, which is £600,000 now, you pay SDLT on the 600 grand. So you save on the VAT, the SDLT plus all the other costs. Your second option, if you're into commercial conversions, is you can issue a VAT 1614D to the vendor. If they accept it, then you don't pay any VAT. So that's going to save you quite a bit of money. In the first option, the transfer going concern, you have to register for VAT. So you've got to carry on the VAT. But if you're doing a commercial conversion and the vendor accepts the VAT 1614D, then you do not register for VAT because you're converting it into residential property. So that could save you some money.
So why would buyer accept this? Do they have to pay more? Or?
No, they don't have to pay more at all, no. But sometimes they might have some issues with how much VAT they've claimed, so they might not want to accept the VAT 1614D. The next thing you need to bear in mind is, if you buy commercial property, please make sure you always claim capital allowances. Capital allowances are fixtures and fittings in a building. So in this particular building here, if you buy a hotel, and by the way, hotels have a high amount of capital allowances. This projector, okay, would qualify for capital allowances. The lights, the smoke detectors, the aircon system, ventilation, all this stuff here, if they've got radiators, all that stuff, okay, qualifies for capital allowances. So this is the actual value of the capital allowances in the New England Club, £126,000, which is massive, big. It's like 25% of the purchase price in our example here. So this is what happened. The property had asbestos in it. So we paid for the asbestos to be cleared out, and it had quite a bit of asbestos. And if you have asbestos, Japanese knotweed, other forms of contamination, you can claim something called land remediation relief. If you took a photo of the previous slide, which I think pretty much everybody did, it's on there anyhow. So you get 150% of the costs back. So we claimed just over £14,000. Because we were applying for planning, and you'll know from experience, if you ever applied for planning, it never takes the 6 to 8 weeks which the planning department tell you. Okay? And I'm one of those sad buggers, by the way. If your planning used to get stuck and you used to walk into the planning committee petrified, if you've ever been there, I was on the planning committee last year, all right, going through cases and deciding whether or not planning should be granted. But this year I came off it. It was too difficult a job to do for different reasons, more emotional attachment to every single case, because you want people to succeed, you see, and sometimes it's difficult. In fact, last year we had one particular lady who wanted to get planning permission and for a small granny annex for her mother, who was something like 90 years old, and she was sat there distraught in tears. And it's difficult to say to her, I'm going to vote against this. Okay, it's just very, very hard. So sometimes you get those kind of cases. But anyhow, so while we were applying for planning, we knew this is going to take more than 6 to 8 weeks. We gave the property to a local charity, and you might know from experience, charities get 80% relief on business rates. And then if they apply for the additional 20% rate relief, they sometimes can get that too. In this particular example, this charity did. So they weren't paying the business rates, they were using our building rent-free. So we said, we'll gift you use of the building, because they were helping homeless people, and in return you pay the business rates. We saved 10 grand. That's another tax. I'm not going to go through this in too much detail, because I have promised you I'm going to allow you to ask questions. But basically, if you have a partnership, it doesn't have to be a partnership, but if you have a partnership and you move that property into a limited company, what happens is the value of the property, okay, or which is called the base cost for tax purposes, and for our purposes we'll call it purchase price. The purchase price of that property, when it moves into a company, increases from what you paid for it to how much it's worth today. So let me give you a very quick example. Let's say you buy 5 properties over the last 10 years and you pay 100 grand each for them. So you paid 500 grand for those properties. Today those properties are worth double. So they're worth £1 million. If you're able to incorporate and you move those properties and you're a buy-to-let landlord into a limited company, okay, on the day of incorporation, your properties are worth £1 million. So now, so your new base cost, okay, is £1 million. If you sell those properties, let's say in 2 years' time, for £1.2 million, the profit you've made is 1.2 million minus the 1 million, which is the value on the day of incorporation, and not 1.2 million minus the 500 grand. Everybody follow that? I've kind of just quickly gone through it.
So you can do that with a single then?
You could do, but you're not going to get Section 162 incorporation relief. So you're going to have to pay capital gains tax when it goes in there, unless it's your main residence, and then you got stamp duty, land tax. But if you got a portfolio, works well. Steph.
Yeah, I think that was the same question. If you, let's say you have 3 properties, and then and let's say you run them as furnished holiday let, and you've claimed your capital allowances, and then at one point in 10 years' time you decide, oh, now I want to incorporate. Can you then incorporate for the new base rate?
With serviced accommodation, because as long as you meet the rules for service accommodation every single year, then you're going to be okay. That's different. Yeah, for you that would work. Okay. But if you've got 3 buy-to-let properties and you want to incorporate and claim Section 162 incorporation relief and not pay any capital gains tax, because in my example here, this person doesn't pay any capital gains tax. I mean, using 5 properties was too low a number. I should have said 10 really, but okay. If you can't claim Section 162 incorporation relief, then you've got to pay capital gains tax when you put the properties into a limited company. So then it's not going to work. It's not going to work. But in your case, yes, that's going to be fine, because you're running service accommodation. And service accommodation is treated as a trade for certain tax reliefs. So you would get that particular relief, yeah? So we did that. Now our property is in a limited company, so the base cost is 650. If we sell that tomorrow for 700 grand, for example, we've only made a 50 grand gain. Yeah? So that's going to save us 19% corporation tax. Capital allowances you saw was £126,000 was the value. The physical tax saving on those capital allowances is just under £24,000. The SDLT saving, which I've kind of quickly covered for you at the start, £7,500. And then this isn't a tax saving, but when they sold the building to us, it was an ex-working men's club. They had 3 of those large 12-foot snooker tables, fruit machines, all that kind of stuff. And they said, what do? We can't store this stuff somewhere, but we can't afford to pay you the rent. The rent was supposed to be £3,500 per month. So they said, how about we pay you 2.5 grand per month and keep all of our stuff in here for 3 months? What do you think I said a deal? I said, of course, I'd be delighted. Okay, I'm pleased you asked. Of course. So 7.5 grand, and then we're going to claim back the VAT on the refurb, which I'm not going to cover for you today, but that's going to get us another £20,000 back. So if you refurbish property, or if you increase the number of units, reduce the number of units, or if you buy a house which you've been empty for 2 years or longer, you pay 5% VAT on the refurb cost. Remember that. So even if you're not increasing the number of units, you're not reducing the number of units, if you ever buy a house which you've been empty for 2 years or longer, you pay 5% on the refurb. So that totals £112,000. 7.5 grand is the rent, but 112. So 112 into 302,000, which was the initial profit, is a 37.12% uplift. That's huge, isn't it? Massive. That's what tax can do. I'm not finished yet though. So you'll recall at the start, we bought the property as a partnership. There was 3 of us. Now let's just imagine we're all higher rate taxpayers, not additional rate. So higher rate means you're earning 50 grand or more. Let's just assume we're higher rate taxpayers. So on the £302,000 profit at 40% tax, which is the higher rate tax, we would pay £121,000 to HMRC. That would leave us £181,000 to ourselves. But because we've moved the business into a limited company, on the £302,000 we're going to pay 19% corporation tax. That leaves us £245,000. So basically we now have an additional £63,000. Make sense to everybody? The only difference between the first and second example is, in the first example, once we've paid the tax, the 181 grand, we can do what we like with it. In the second example, the money's stuck in the company. But we're not bothered about that, because as property developers, we're going to recycle that cash, so we're going to invest all of it in the next deal anyhow, because we've got income coming in from other sources, yeah? So that's another 63 grand plus the 112 grand, so an extra 175,000 pounds on top of the 302 grand. That's not bad going, is it? Yeah? So that kind of hopefully gives you a flavour.